How's it going, everyone? This is Anon. None of this is financial advice. This is for entertainment purposes only. Alright, let's see. Did it get pushed out to the Discord? Looks like it did. Alright, so cool. Let me pull up a couple things. We'll kind of get started. What's up, Berthium? What's up, Jerry? What's up, Awesomeness? Valjean? What's up, Hunter? Hey, yo, what's going on? Alright. We're going to go ahead and just click into a couple things, get set up, and then how's everyone's day going? How did everyone fare in the market today? Oh, look at that. So, I am at 1997 subscribers. So close to that 2K mark. So close. Not there yet. We'll get there, though. And then, somebody was like, oh, someone on Reddit was trolling me a little bit in a DM, and he's like, and you're making all that money on YouTube. I said, I don't think you know what you're talking about, buddy. He said, what do you mean? I was like, I don't mind showing you guys. I don't think it really matters. So I just pulled this right now. I'm going to make $55 from YouTube, even though I do it every single night. That's for a month. So, if you break that down, pretty sure it's like not a whole lot. So, if that guy ever watches this, he'll know that. Yeah, I do this mainly just for you guys, not so much for the money. It really doesn't bring in, but it's fine. Like we're here to talk about stocks, and like if I can give people some free advice, or as far as like how to look at stocks, or if you learn anything, or if you just want to come and hang out, that's the point of it. So I traded BoxD today, entered in at 176 and got out at 207, 30% gain. Hey, that's a win. In days like these, the win's a win. That's the way I look at it, especially the way the market's been whipsawing. So, yeah. Let's see what else is going on. Oh, yeah, I'm supposed to grab content. So I have to turn on like all this stuff, and I'm supposed to like tweet it, and I keep forgetting to tweet it. I say I'm going to do it, but I never do it. What's up, D? How are you? How's everybody going? How's everyone doing? Like, is everyone okay? I was going to say, I know it's been rough. The market's been very choppy and not a whole lot of fun to trade, but, it's one of those things that, it is what it is. You can't predict everything. I told you guys with the SPY, I am, at this point expecting us to retrace back to that 340s level. I'm just waiting for it. So every time it goes back up, I buy more puts and more SPXU, and, once again, none of this is financial advice, but this is just what I'm doing. So, on all these run-ups to back up to 4, bought some there. I just keep stacking them every time they run up. So now as we come down, I'm holding them because they're for January. I'm giving myself plenty of theta, so I'm not getting killed on all these different chops. I'll be down like 25-30%. When it runs back up. But, for me, I'm just accumulating when it's up here for January. Because I think that's going to happen sooner than that, but I'm giving myself plenty of theta. So, All right. What's up, Jason? Happy day. Happy day, buddy. Happy day. All these different tickers and going to come talk stocks with us. And I'll put down, where's the YouTube? Is this the right one? Yeah, this is it. Started streaming 5 minutes ago. Copy that over, and hopefully we can get this going. So what do you guys want to talk about today? Obviously, all the fun tickers we normally do. I did work a little bit on the DD I'm trying to put out for, short squeeze stocks and kind of comparing all the different ones that are out there. And I think, obviously, most people know that tomorrow we're going to have the guys from the brokerage on optionality. So that will be good, too. So we'll have some. You don't have to just listen to me ramble on. You can actually ask them questions. And, Alec used to work for Susquehanna. So he actually, he doesn't work for them anymore. So don't worry. He's not like. But, he used to work for them a couple years ago. And so at least he's got a perspective on what smart money does. So, are we supposed to still have hope despite the price keeps going down every day? I mean, that's what a bear market does. I mean, typically with bear markets, I'm assuming you're talking about Aterian, right? Yeah, I mean, so you guys realize, right? So it was at 49 a share like a year ago, right? So from 49 down to 2. It's been doing pretty much nothing but going down over the long-term trend, right? Obviously, this was a weird pump because it was on low volume. This is when retail focused in on them, and then since then, we just randomly will spike with like huge amounts of volume, and then we'll go get shorted back down. So yeah, I was going to say, this is pretty normal. So let's just cover the last year, right? So this all happened back in August, right? So August into September is when the last time it ran, like hard, right? And then we got a mini one here in April, like March into April, right? What was the float a year ago? The floats increased because basically what happened was they had a debt covenant breach with High Trail. And so let me pull up Aterian for you guys so you can see it. All right, here we go. All right. So here's dilution tracker. So you can see what happened basically. So in the beginning, they had a very, very tiny float, right? They diluted a small amount. They basically acquired a bunch of companies during this time frame, right? They used the cash from this raised money to buy these companies, right? So what happened right here, though, was, I think it's right here. Let me zoom out, right? So there was some slight dilution that happened here. And then this is where the debt covenant gets breached, right here. So what a debt covenant breach basically is when you have a promise to a lender. So the lender lends you money, and you say, I will maintain a certain EBITDA, or like a trailing EBITDA, which is earnings before, what was it? Make sure I say this right. EBITDA is earnings before interest, taxes, depreciation, and interest, I think, right? Or amortization, that's the last one, yeah. So what that basically means in like dummy terms is they promised that they would keep their numbers at a certain level. What ended up happening is when they had the shipping crisis. So, like, put it to you this way. Imagine you have a mortgage, right? And everything's going fine, and you're staying within your budget, and everything's good, right? So you made a couple of like purchases. You got a new car, but everything was in your budget, right? Then all of a sudden, your mortgage company comes up to you and goes, "Hey, so things are getting a little tight around here for us. So we're going to need to go ahead and raise your mortgage." And you're like, wait, what? Like, we pretend this is like an arm loan, right? So they say, well, you're on an arm loan, so we're allowed to actually charge you more. So we're resetting your arm, and you're going to now have to pay more. This is what happened with the housing crisis in 2008, just for the record. So what ends up happening is you go, okay, that's fine. So now how much do I owe? So say before you owed like $2,400 a month, right? And they say, well, it's not going to be too bad. We're going to raise you up to about $3,000. And you're like, okay, that's $600 more, but okay, that's fine. So then the next month they come back and they say, all right, listen, things really got tight. We're going to have to reset the arm again. And then now it's going to be $4,000. You're like, wow, like, whew. So you don't have a choice, though. So you still have to pay, you need somewhere to live, right? So in this case, and you're in this contract with them, too. So, like, what happens to Aterian over time is these shipping companies basically raise their rates from each container used to cost $3,000 a container. They got up to $30,000 a container. And these guys are shipping, like, massive amounts from Asia to the West Coast. So what ends up happening is their numbers get skewed, and so that violates their EBITDA, like the trailing EBITDA agreement that they had. So they have to give up equity now to High Trail, the lender, and that's what happens right here into right here. So this is when all the dilution from that happens, right? So now we're sitting there, and it's going through, and we have like 53 million, and then this is when they do the private placement because they're running out of cash. So they ended up doing the private placement with Armistice, and what ends up happening is this is when the second round of it hit, right? Now you still have these outstanding warrants, which is the rest of the warrants right down here. The majority of them are sitting, though, at 25 a share. And the ones that just came out from Armistice and High Trail, if I remember. Yeah, Armistice and High Trail right there. So you still have your remaining 7 million shares. But at this point, once they get done in September, you have to be above 320. The stock price has to be above 320 for them to even touch these warrants, these additional 7 million shares in warrants. So the float a year ago at one point was like 20, I think it was like 25 million or something like that, and then it jumped up to like 30 with some of the dilution, and then it went to 53, and now we're going to be at like 70. I think with everything said and done, it's going to be around 70 something, right? Like 75 roughly, probably, maybe even less than that, because these 5 million warrants won't be touched. So we might be in like 72 or something like that, if I'm doing the math on that right. And that's if it's above 320. So no matter what's going to happen, is they have to get the stock price up to 320 to even touch these warrants. So minimum, you're going to see a run up to like 320. Like, that's absolute minimum. So, dilution is not great, but the whole thing is they have to be able to survive. And what they did was they took out money, and they have a line of credit, and they also have, obviously, they still don't, compare them to, for example, let's look at them real quick again. You have a float of 64 million. Shares outstanding should be right now, I think, 68 roughly million. And so if you compare them, though, to, things like BBIG, they have, 280 million shares outstanding, right? So they've diluted a lot more. You look at somebody like Prague. Well, that's right, it's not longer Prague. It's, I think these guys now. 140 for a float. I think they have 200 million shares outstanding. Aterian still, even though it sucks, they still are pretty small for a float. So, they're considered a micro float at this point still. Yeah, this is what Spencer said. One of the primary purposes of debt covenants using EBITDA is to strip non-cash transactions out of the company's results. The goal is to get a better show of the financial operations. Correct. And that's why when they actually went through and violated it, it was because they had gotten way too tight. So, they made a bunch of purchases, and those purchases didn't immediately start, paying dividends. So they bought. I'd have to go back and look at their catalog. We can take a look real quick. But, this is how you have to look at companies. And we go through the balance sheet each time a new one comes out, and we can review it. And, I think what we'll do is the next time, I guess it's August 8th, I think, we'll go through the balance sheet, like line by line, and we'll go over the whole thing. And I'll show you guys how to kind of read it. Because right now we're in the dark. We don't know, because balance sheets are basically a timestamp of the last quarter, right? So the 10 Qs, Q for quarter, what we get is a snapshot of what happened last quarter. They're not, you can use them to kind of predict what's going to go on in the future, but they're not, entirely accurate that way. They're meant basically just to be a historical record of what happened. And you can't use that to predict, obviously, the future, but you can try. And that's what a lot of, analysts do, is they try to take a look at each quarter, ask some questions at the each meeting, and then try to get a sense of where things are with the company. So when they went out and bought their brands, right? So they had different brands, right? We'll scroll down. So they've launched a whole bunch of companies. They own Home Labs. They make a bunch of stuff on Amazon that you buy. The Squatta Potty, most people know. The Spiralizer, Mueller actually has a good coffee maker. Riff 6, which is cool. They actually do have a decent chair, from what I understand. I don't have it yet, but taking a look at them in this one, the Trio, the Enema Coffee everyone wants to hear about, right? From Aussie Health. To me, this one was not like, I don't quite see why that one was a good purchase. There was a couple of them that I just wasn't that purely, like the essential oils, I'll be honest with you, I think that was not a great purchase. I'd have to look and see, but there was a couple of them that they bought that I was like, I don't know if I would have paid that much for them. But yeah, so you have to figure, they spent this money, right? And that's why they're being written off in goodwill. So if we go to investor relations, we should be able to pull up the balance sheet, I think. This is their inductment grants, first quarter results. They should, yeah. So, you take a look here. Here's your cash as of the latest one. So, like $44 million in cash. Their accounts receivable had lowered a little bit. The inventory grew, so they got most of the stuff, and they're probably stocking up, honestly, because they didn't want to deal with the shipping rates. So they were just like, we'll bite the bullet now, and that way we stock up so we don't have to deal with the shipping rates, even though they are going down, which is a good thing. Prepaid and other current assets. So these are your current assets, right? So here's your goodwill impairment. Your goodwill is being written off there, and they also have a couple other, let's see. This is where it's more fluff, to be honest with you. So like intangibles, it's hard to put a number on there, an accurate one, which is why typically I don't include those in like the full evaluation of a company. I say, okay, well, how much is this really worth? How much is Amy worth, the AI software? So do we think we'll move up again, even to, yeah, I mean, I think we'll see another move on Aterian. I think Booksy actually had been covering it. If you guys check out in the Discord, the technical analysis, Booksy had put this up for you guys, and he thinks there's going to be a move coming up pretty soon based off TA. I don't know if you guys remember. So here's Booksy's thing, right? So he was pointing out that there's a pocket of liquidity, like here-ish, that really hasn't been, like, because we basically, like, we pushed up hard, right, during these days. So there's not a lot of, like, liquidity in this area. So you want to see this going to move up and kind of trail around for a while, and then he said he sees us taking another step up. Probably my guess would be before earnings. So what they typically do is they like to let things run before earnings and then drop it. So I could see us, long term doing that, like, if you notice, this was the run up right before earnings. Earnings comes, it dropped, and now it's been just chopping around. Earnings will be roughly around here-ish. So, yeah. Yeah, they own Vremi, or Vremi, I guess, I don't know how to pronounce it, but yeah. Is anyone concerned about the lack of products they offer? Like some brands only offer 2 or 3 products. Yeah, they decided they were going to hold off on products right now because obviously launching new products actually costs money because you have to market them, you have to do all these things. So yeah, I don't actually disagree with that. At this point for them, they just need to weather the storm and get things back to normal. They need to cut down on expenses and try to basically figure out how to, do this, effectively and like run their business as effective as possible. So, yeah, I'm just taking a look. Because I know we left a whole bunch of gaps up much higher, and we never got to them. There was a gap up in the like 7s and 8s, and those never filled. So at some point we will see to retest these areas of liquidity. But he drew them out. You can see this was an area of liquidity. They like up in the 380s that really got skipped over. This one in the 280s right here. So what we're seeing right now is the majority of the time when they leave it down here in this level, this is accumulation zone. So every time it enters into this accumulation zone, basically it's starting to grow and grow and grow. If you take a look at the options chains on this, let's pull them up real quick. Sorry, let me grab them real quick. You're starting to notice that people are buying a lot of stuff further out, and there's probably a reason for that. As the stock price keeps chopping around being really cheap, it's making call options really cheap. And what you'll see is these hedge funds like to yo-yo this thing. They basically say, all right, we're going to allow this thing to go up and down because they don't make as much money when they're down here shorting it. Because there's not, you can make some money going from here to here. That's fine. But it makes more money when you bring it all the way back up. It doesn't cost much for them to push this up and then reshort it. So this is like their piggy bank. When they come need it, they basically pump it up, and then they just regain control and just push it back down. Like that's the plain and simple truth of this thing. This thing will, it looks like it's kind of been their toy piggy bank for a while. Because if you look at these little runs here and there, they just let it go up for a little bit, and then they just push it right back down. Because this is a small cap, and they have so much power that, and retail's disorganized, so retail doesn't hold their crap together. They typically go in and out because they get shaken out of the play, and then they'll FOMO back in, and that's how retail investors kind of do it. So if you look, this is when retail got it together. It started pushing up hard. They even got it to the second thing. It was on Reg Show this entire time. It was on Reg Show this time. So, if you look in the past, I think it's been on, I think I can pull that up. Give me a second. I'll pull up Vortex for you guys. Yeah, I mean, Josh, are you expecting earnings to be bad? I don't know anymore. Like, I'll be honest, they missed on revenue last time. Their EPS was not that bad, but, to be honest with you, like at this point right now, until they go back down to relatively low levels on shipping, I don't expect them to be profitable because that's just, the way the world is right now. And now you're running into a slowing economy where people are buying less. And so, because inflation's going up so much and they're trying to maintain their margins. So I'm not super hopeful for earnings being an absolute smash. For me, I would like to just see them kind of tread water and be exactly where they are and start lowering some of their liabilities and stuff. And they need to figure out a way of bringing in more cash. Finding a product that they're gonna go ahead and I wrote Aterian and I said, listen, you've got a lot of people who are shareholders of yours. Have you guys thought about reaching out and trying to figure out what they want. Like, yeah, we like Squatta Potty, but you don't buy Squatta Potties over and over again. You buy like a couple for your house and that's it. What else are you going to sell? Okay, you sell like ACs. Well, those are like one-time purchase things. Like a chair will last many years if it's good quality. An AC will last. You need to find something that you can do and make a market for. So that's kind of what I told them, and hopefully they've listened to that and they'll start reaching out and trying to figure out what they can do in the future. Because I think for them, they have the support of retail. They were one of the few companies that actually spoke out about naked short selling. And here's the thing. It initially happened back here, right? And I absolutely, completely think that this was... Here's this one right here. During this run right here especially, they literally were naked short selling. Like, this is my opinion, and this is obviously, why they even tweeted about it. And I think there was evidence that that was true because of the brokerages. The brokerages were having huge failure to deliver problems until High Trail basically allowed them to get out of it by unloading all those shares. Once again, this is just my opinion. I have no concrete evidence against that. But what I've talked to them when I talked to investor relations, they mainly pointed out that the problem really wasn't so much the short sellers, but it was the short sellers were probably not locating, which is another thing. That's probably, I can't say for sure they weren't, but they were probably not doing it right, which is normally you have to go and locate shares to short them. That probably didn't happen, in my opinion. But the brokers were the ones that literally were eating FTDs and just kicking the can down the road because they knew that there was dilution coming at some point. And so they were the ones that weren't delivering our shares that we were buying as retail traders. And that's why if you look at the FTD data for each time, yeah, there was an issue with naked short selling. There was an issue with them not delivering our shares, and it was our brokers that were the ones screwing us. Like, that's the truth. Like, if you go back and take a look at the FTDs, so let's remove some of this stuff. Let's get rid of all this stuff and just look at this, right? So let me go back. Just that's the big run, right? And all right, so let's take a look at utilization. Right, so utilization during this time, right, was super high. It was in the 90s, 100, a couple times, but it ran up because it went from basically like 60% utilization all the way up here. We've been basically really high utilization though since March of this year. And yeah, they had this like anomaly where it spiked down for a second, but then went right back up and it's pinned at 100 again. So the question is, if you take a look at FTDs, look how many, and granted, the float size is larger, but look how many FTDs were during these runs. Especially this last run, right? They peaked out at 2.48 million failure to delivers. Our brokers were the ones that were basically not delivering. So, if you're looking at this objectively and look at the threshold list, once again, look at the spike in FTDs, look at the threshold list, right? And then what happened? The market started crashing and people basically lost steam, and then they pushed the stock back down because I think Armistice shares came out, and I believe there was about 9 million shares, common shares that came out, which basically started, if you look at this, when you had that many shares coming out, it allowed the shorts to basically, start moving down the short interest and covering some because they were able to basically shake retail from the top. Because look, I mean, you can see where retail basically hit that 7, and then it just from there kind of chopped around, and then retail was, going out during these things, because there was some dilution happening. And instead of understanding, okay, we're still at 100% utilization, they started getting shaken out. And that's fine. Like this happens with every single stock that does this. It runs up for a second, it goes back, but eventually what happens is some people hold, and then it happens just again and again and again. And that's kind of what the history, if you look at every major squeeze stock, look at AMC. how many times has AMC spiked back up? And let's take a look at the chart, right? So you have these spikes, they get pushed down, spike, huge spike, and then since then, you go to get down to like the 30s, it spikes back up to 50 something, chops around here, gets all the way down to the 13, spikes back up to 30. These things happen on these stocks, and they do it pretty often. GameStop's the same way. And so what you're going to see, the longer people hold this stock for Aterian, you're going to see the same results happen, which, you have these massive spikes throughout, right? And the more and more people that do it, the more often that happens, because they start kicking cans and trying to figure out how to, bleed extra shares on, and there's all sorts of stuff that happens. So, but yeah, like, that's going to happen over and over again with Aterian. So there'll be plenty of times where this stock will just run for no reason, like here. Like, there was no reason. There was no news. It wasn't like, oh, there was some major catalyst. Like, it literally ran. We had 2 million shares traded that day, and then the next day we woke up and it was 140 million. And the only thing that was different was there was some DD, like, on Reddit, which is not even a thing. So, like, this move happened basically for no reason. And it will happen again at some point. So, yeah, you guys want to know, like, earnings will come out, like, they might run it up again during that time frame, because that's, they need to move the stock up and down to make money. Like, when they feel like shaking the tree, they do it, and then when they get too low and they can't get the company to just go, okay, well, we're just going to fold up and die, well, what they do is they allow the stock price to run back up because they can short it back down. So, there you go. Sell me something I can buy weekly or monthly. Yeah, and that's how I feel about Aterian. They need to figure out a way of capturing more, like, regular business, not just these one-time, like, that's good and fine, but at the same time, you need to find something that sells every single week. So, all right, what other stocks you guys want to do? Because everyone already knows, most of the people in here already know kind of how that all works, but you guys wanted me to cover it, so I was just going to give you that. Anyone want to talk about the SPY? Anyone want to talk about different tickers? Rev. Do you want to talk about Rev? Sure, we can talk about Rev. All right, Rev is Revlon. Revlon obviously had this massive spike in volume, right? They're restructuring under Chapter 11, if I remember correctly. So let's take a look real quick. Yeah, we can do TSP in a second. Let me just give Red a go over real quick. Okay, so Revlon, right? So Revlon hit this low, hit a spring, was filing for Chapter 11, and now here we are. So the reason why people like this is because even though, right, we have shares outstanding is 52 million, right? So not a huge thing. Free float, though, is only about 5 million shares. So small float that you're dealing with. And let's take a look. So the short interest right now is 5.42. Remember, shares outstanding was 5.26. So you actually now have over 100% of the free float shorted, according to Ortex. 100% utilization, which means that there's not a lot of stock to play with since basically back in March. So from March until now, we've been 100% utilization. The cost to borrow average at this point now is 800%. So right here you can see 500, but they're saying that's the minimum, and the average right now is about 800% cost to borrow. So, this is a stock that at some point could absolutely just explode, as long as they don't do any sort of dilution or anything like that. But right now you can see the short interest has grown. They're now higher than the actual the free float. So if retail was smart and actually just was interested in this, it'd be interesting. Failure to delivers, look at them spiking, right? Failure to delivers are spiking. Oh, and are on the threshold now, right? Security lending volume is spiked. So, yeah, and you can see the short interest is absolutely just spiked. So, yeah, I mean, it's there. I mean, once again, these things only move, though, if there's enough people that are behind them, because if not, then they'll eventually just teeter out. And then we found out from Alec in this, who used to work for Susquehanna, that they just file extensions. Like, they're like, oh, well, we have all these FTDs. Well, let's just file this Rule 144, and we'll get like a exemption for 35 days, I think he said. I'm like, okay, well, that's good information to know. How many days has it been since Reg Show started? What's that? Threshold list on June 22nd. So, how many market days since? Many market days since June 22nd. Anyone want to do the math? You guys can do the math if you want, but count 35 days from that. If it's still, there, it's going to probably move pretty violently, just because the cost to borrow, while high, it's only on like 5 million shares, and these hedge funds have a lot of money. They're probably just waiting for something, but I think we saw on the dilution tracker, Revlon. Here, they don't really need that much cash. I think they're cash flow positive, if I remember correctly. Yeah, they're cash flow positive right now. Hold on a second. Yeah, they do have an ATM though, so at any point they can basically use this ATM. So that's the only thing that's like, you got to watch. But they wouldn't use the ATM until the stock price is higher. Right now, their stock price is only $5 a share. I don't imagine they're looking, because they don't really need the cash. So, but high short interest. High. All right. Scratch TSP. Okay, we won't check out TSP then. You guys want... All right, you want to look at Exela? Oh, this poor stock. It's gotten beat down. Okay. So here's the reason why Exela has gotten just absolutely annihilated. So, see this big number, this big bar here? That's all dilution. So this is the actual amount of shares, and this is all dilution. Yeah, so right now, as of January, they had $1.5 billion in debt, so net cash is negative. They already used a good chunk of their ATM, which expanded another $150 million in dilution. A company's offering a tender of $100 million and 6% notes by 2029, $100 million in shares, so more dilution, which is this huge bar. So you've got warrants at $4, right? 9.7 of them. You have these notes convertible, which is another form of dilution, and they're only at $1.25, but they're not registered yet. But you also have this active ATM of 125 million, 250 million. They've already used all these. These are all depleted, but they do still have another shelf that's ready to go. So these guys are locked and loaded to dilute even more, and they're already in the pennies. So this is a stock that's high risk, and that's why they have every single one of these red, is because they are basically just diluting and diluting and diluting. Amended convertible note exchanged preferred. 17 million shares were exchanged for 22 million in convertible notes. That was back in March. So to me, this is like just, and they're already burning all this money. Like all the money that they've been raising, they're already burning. So I don't know about the underlying. You guys can tell me, but like to me, they've not taken care of their shareholders as far as that goes. Like, look how much dilution that is. You're talking about like, yeah, they added another 400. Sorry, 300 and something million. Yeah, it's not great. So they would have to do a ton of money, because look at their, when you have a total of, what was it, 441 million shares outstanding, like you have to make a ton of money to generate that. So, and they still need cash, which is the scary part of it. So, yeah, I mean, in the short term, it's going to chop around, but overall, this thing's been basically a falling knife because they're diluting so much. I mean, if you want, we'll take a look at the Ortex just to take a look at it, but if the data's, I can't imagine it looks good. Yeah, I mean, you've got 50 million shares shorted, and that's only less than 12% of their float. So, yeah, they're basically not a squeeze candidate, and they're not a long-term, like at this point, until they start bringing in money with all that money they're trying to raise. They're going to remain very low, probably. But once again, not financial advice. I'm just showing you what I see. What was the all-time high on Rev? What was it? I mean, it recently was in the 20s. Like as of, let's see. It was at 27. At one point. So, Box D has warrants. Let's take a look. Alright. Box D. Alright, so Box D right here. Oh, thanks. Is it Pratik? Thanks, Pratik. Appreciate it. Here we go. So let's see. Yeah, they've got 20 million warrants. 18. They're at 1150 though. So right now, the Box D stock is sitting here at 1. So for them to unlock these warrants, they've got to push that stock all the way back up to 11. And I don't even see an underwriter on those, but to unlock these SPAC warrants, that's what's going to happen, right? You're going to have to get the stock price all the way back up there. So at some point, somebody who has these warrants is going to want to unlock those. So they'll push this up at some point. The question is when. I don't know. It looked like you had hit a spring here, and then now it's consolidating. This is just one of those things where like these SPACs all start out around 10, right? They get a bunch of people in, they don't really know what they're doing with the money, and then all of a sudden it just dumps, right? It shakes out most of the people that bought at 10, and now what will happen is people who are the smart money will come in and start accumulating, right? So you actually had some volume on Box D, right? Because retail starting to get in. Right, because you can tell when retail gets in because the volume increases even more on some of these small cap stocks. So Boxy had this run, got pushed back down. Now you're getting a little more pressure, right? So let's take a look at the Ortex data on it. Okay, so what happens when a ticker has 100% ownership with an institution and you get an increase in volume? With what happens with the stock price? Yeah, FTDs basically happen, because unless the holders of those are lending their shares out, which actually creates more problems in the long run for them. But essentially, what happens is the stock will start running up, and then typically they'll kick the can down the road, and they'll try to see if they can shake retail out, because they're not supposed to be in there when those things happen. Like, if you look at some of these tickers like WEBR, DTC, they're kind of in the same boat. They're getting absolutely no volume. They're very low liquidity stocks, and if retail actually like FOMO'd into them, they would fly. But it's just one of those things where, most retail doesn't quite understand that. They go with whatever the one's getting pushed on Reddit, and then typically end up losing money on most of them, unless they're smart enough to get out after like not being greedy too much, and they just, And I know there are some people in here that are in Redbox, and Redbox got screwed. I mean, if you were in Redbox and you were long, you got screwed, because they took away the ability to trade options on that stock, and that killed the gamma. And I'm actually upset about it, because I bought puts on that thing, and once they killed that, there's no more market anymore. So my options are basically locked in at like these horrible prices that, like, yeah, I'm green, but I should be way more green. Like, I had shorts at like 16 and 13, and the stock now is like 5, and my things are worth 13% more, because there's no market for it, because they took away the market. Like, that's something I should have been like, at least minimum like 80% up on, and I'm not. So they screwed over all options holders on that stock, even if you're right. Like, at this point, I'd be probably better off if I let them go in the money and then get those things, because then I would be short at 13, because those options at this point right now are worthless. Even my puts that are deep in the money, like. So anyone that was in Redbox got screwed. Sorry about that if you were, but this is why we should be angry. Like, we should be angry at the SEC. We should be angry at these market makers. We should be angry at the brokers. This whole system is meant to screw us. Like, the fact that they're literally allowing these, these inverse single stock ETFs. You are allowing basically naked shorting to happen. Because ETFs have this rule that they don't have to like locate; they can just basically make things for liquidity's sake for their ETF. Like, it is absolute and complete crap. Like, that is BS, and that's going to be used against a bunch of different tickers like Tesla. Anything that retail likes, they're basically allowing them to basically naked short, which is really, really obnoxious that the SEC is just going along with this. Like, okay, that's fine. Are you kidding me? Like, but yeah, FTDs would happen for that. All right, back to Box D. So Box D, right? We got the shares outstanding, 68 million, 65 million free float. Okay, so short interest. Let's take a look. Utilization, though, is not 100%. Okay. Huh. Alright, so how many shares are out right now? That's interesting. Okay, so we just took a look, right? So 65 million shares free float. Out of those 65 million, only 2.88. No, that. Oh, you know what? I see what's happening here. Supposedly, Redbox open options chains they weren't supposed to be open. How does that even happen? They wanted to make money, so they did it. And then when they found out retail was going to squeeze them and cause another like GME situation, they were like, "Oh, shut this down. We weren't supposed to have options." Yeah. So, okay. So here, this is interesting. So look at this, right? This should have been from yesterday, right? Was it? Have they not updated this yet? Yeah, so they didn't update Box D for some reason. It's weird. Because if you look on some of the other tickers, if you look at their short, they had updated them as of release date, the 12th, right? All right, release date's the 12th. That was yesterday. Okay, yeah. Okay, that's better. It refreshed finally. Okay. I was like, I don't know if you guys saw it. I can go back in my video, but like, didn't this say 2 million shares for a second? They must have just done that, like while we were on this thing, because this said 2.88 million shares, and I was like, huh, okay. Yeah, so you obviously see that it was 4.2 here, right? And I saw the 87% increase. That's so weird. They literally just did that. They just updated it. So look, so now the live update is now thinking that it's 5 million shares. Make sure we're on the right one, right? Box D. All right, Box D. 65 million shares, free float. No, look at it now. 2.88. What is going on with this? Look at that. Okay. They're obviously having issues with their system or something, because as of yesterday, 4.32, right? Well, their live is supposedly 2.88, which is obviously not correct, because yesterday it was 4.32 million as of the snapshot. So yeah, something's going on here. But you guys saw that, right? So when I was here, that said 5 point something. Yeah, we should be able to go back in my video and look at that and see. But yeah, I mean, that number should probably be either 4 or 5. Because at minimum, it would be at least 4 point something. Because we've only had 1 day since the actual exchange reported. This is a snapshot that comes out twice a month for anyone that's not familiar. So twice a month you get a snapshot of what the short interest is actually like doing. And then the rest of the time they have to estimate it. Let me see if Fintel's any better. Hold on a second. Okay. Oh, and if you look, Rev has moved up to number 2 on the short squeeze board for them. So, just throwing. Remember, I said Rev should probably move pretty quickly in the next. Yeah, it's moved up to number 2 on the short squeeze. Okay, we're doing Box D though. I don't even know what Fibonacci that is. Just what he said. Someone. Oh, you. Jay, I'll get to it after we look at this thing real quick. Just be patient. All right. Let's take a look at short interest on Box D. See if it's any more accurate. So they're reporting that short interest is 9% of the float. It'd be 4.3 million. Okay, so we've got Gamma. They have some like 250,000 shares. Cost to borrow has gone down though quite a bit though. Wonder why that is. And they're not shorting it a ton. So what's going on here? They're saying 4.3 million, which is 9% of the float. 4.3. Okay. speaking of which, these are the ones that have puts in. Susquehanna, Citadel, and Cutler are the three biggest ones. All right, so what did we say? We said it's 4.3, and we compared it to here, where it says 2.8. Yeah, something's a little bit wacky here. Utilization just dropped off a cliff, too. Look at that. It says utilization just dropped down to like 54%. That's strange. It went from 90 to 50 in like 2 days. Is there dilution going on here? No, the warrants are at 1150. And the notes convertible are at 12. They have an equity line of credit, but I mean, the biggest thing for them right now is they don't have a ton of runway with the cash that they have, so they're going to have to do something at some point. So maybe they dipped into their equity. I mean, that's the only thing I can think of off the bat, is they dipped into their equity. Yeah, because they have been burning cash pretty decently, and they only had, their estimated is 36 million, and they only had 30 million cash left, which will only last them about 2 months. So they're going to need to get cash very soon. Yeah, they need money. You're right. So that's the biggest thing, is because they need that money. They might be doing something. It's interesting to see this right here drop so drastically. Something's going on there. All right. Yeah, it may be some sort of form of dilution. So yeah, I would personally, I would be very cautious and at least keep your eyes on what's going on with this, because we need to basically watch this as retail traders, because something obviously happened in the last couple days, right? Because you don't normally have utilization go from 100% to 50 in 3 days. It's 1, 2, 3. So that is not a normal thing. So just be cautious of that and keep your eye on the ticker. Yeah, so we should see another dip down. I just want to make sure I put this. I was closing out one of the windows, but for Aterian, for anyone that wanted to go back, he basically was saying that he expects another dip down to this level in the 220s before the run up. So, just throwing it out there. You would possibly see this rise back up into this 280s range and then dip down again before running up. If I'm reading that correctly. So the demand zone's around 210, maybe 213. So there. All right, now I can close it. Okay, we'll get to J Pong's thing. All right, J Pong wanted to look at VLCN. Okay, so VLCN had a random spike here. So what's going on with this random spike? You had no volume at all, and then a random volume of over, I don't know, was that 50 million? There wasn't even 50 million back then. So what's happened here? Good question. So you wanted to see the cup and handle. Cup and handles typically go from here. It's a little more pronounced. This could technically be ending up, and then you would have your next leg up. But it's a little shallow. But Normally these things form on a larger scale. Let me just see if I see that. Well, hold on. I kind of see that. Hold on. Like here-ish. No. Wait. Let me zoom out more. If it was here, this is the bottom. This could be, it needs to go, I guess you could almost call that the top. And then this could come down, and then you would see the next run. Your earnings were here. So, yeah, I mean, this could be a formation for a cup and handle. You know, it'd be from here to basically here. This is not the best, like, log scale, but let me see if I can pull it up on something that might look a little better. Give me a second. All right, what symbol was that? VLCN. So, look at the TA first. I need to reset all this stuff. We were looking at the what's it called? The inverted yield curve. That's what I was looking at last time. All right, hold on. We need to figure out why this thing's doing what it's doing and make sure there's no warts on this thing. Give me a second. VLCN. Okay, Volcon. Well, there's a couple warts already. Let's see what they are. High need for cash. They are almost out of money. So, looks like they have a January offering that got priced. You've got warrants that are not registered, but they are getting registered as of... No, they've already been issued. They just haven't been registered yet. They're at 103. Okay, so what is this January S1 offering? So they need, yeah. They just made a ton of money, they said. Well, they need a ton of money because they have negative cash flow and they only have $3 million left. So what did their earnings say? That's the question. Let's take a look at their earnings. Okay, so cash went up to $13 million as of March, right? So that's good. Your accounts receivable is less. No, it's more. Yep. Okay. Inventory deposits, prepaid expense. Okay. So that's a nice jump. This is the Q, right? Just make sure. 10Q quarterly. Okay. All right. Then long-term assets have gone up. That's good. So total assets at 25 million. Liabilities. Okay, that's not too bad. Small float. Okay, revenue. Cost of goods sold was pretty high. Why was their COGS so high? COGS is cost of goods sold. Huh. They had a net loss, but it shrank. Okay. Here are your warrants here. Okay, so net loss right here. So they're bleeding some money, right? companies accounted for this as a stock split since all common stocks on July 27th of 2021. It had been done by... As a result, the Series A and Series B converts from a ratio of 2.5. Okay. I'm just taking a look. Alright, so we should be able to see some news. Because like on the surface, it doesn't look horrible as far as like their balance sheet. The only thing that's concerning, though, was obviously them looking like they're out of cash. But if they got a cash infusion through something, let's see, news. Volcon receives thousands of pre-orders in its stag and... Okay. Okay, so starting at $40,000, it's redefining off-road experience built by enthusiasts for enthusiasts. Well, it says potential, right? The company has received thousands of non-binding pre-orders, right? So here's the deal with that, right? So you're talking about there's no contract for them. So technically, anyone could sign up and say, yeah, I'm buying this thing. There's no collateral being put down, which means that any one of them can back out. So hypothetically, a bot farm in Asia could be saying, you know, we want these things, but there's nothing that's concrete that's locking these people in. So that's the only danger, is if somebody was trying to drive up the price, it is a non-binding agreement. Therefore, there is nothing that keeps them locked into saying, oh, well, I don't want it anymore. So that's the only concern I would have is, you know, I'm sure if it's a good product, they probably are real people that are doing it. I'm just saying that the non-binding thing is the only thing that I'm like, eh. Yeah, and it kind of, I remember with Mullen, they had that one company that ordered the 70 million in pre-orders, and they were going out of business, or they weren't even in business anymore, and they weren't in good standing with the state of Colorado. So, like, that's the only thing about these small caps is, like, if, for example, you know, these are not legit orders, and, you know, they're just pumping up the numbers to make it look good, that would be my only concern, you know. At least for the Tesla trucks, the Cyber trucks, they were collecting some money from that, so there was less, you know. All right. So their view stag in action. Yeah, I don't know much about these guys, so I don't want to, like, you know. Yeah, so they have the runt and the grunt. So the runt, the grunt, and did you cover Exela? Yes, I did. They're in some trouble. Long story short, if you want to go back and watch it, but basically, yeah. So Exela basically had a little series where it looked like they were gonna be. They had a bunch of like short exempts that were being stacked up on them, and we weren't sure what they were for. And then we started looking at them and going, okay, well, it looks like these guys basically are diluting the hell out of this company, and that's what they were doing. So overall, it didn't look great. If you're long on them, it might be okay, but like you're talking about like years from now. Just the amount of dilution they have is huge. Okay. Yeah, so I don't know a ton about this company besides the fact that obviously they make these. So it's basically an electric, right? But this Stag, gets up to 80 miles an hour. I don't know. Maybe people are into this stuff. I don't live in an area where this is like, something I need, but it looks cool, looks fun. The only thing I just want to make sure people are aware of is it's a non-binding agreement for all those pre-orders. So it does not mean that this thing actually, is locked in and they made $70 million. That the wording is key right there. It says, since then, the company has received thousands of non-binding pre-production orders. So, yeah, I can imagine this is probably popular in certain states. If finalized, would ultimately result in more than 70 million. This is a PR clip, though, from them, right? They've opened pre-orders. But, yeah, so this stock, though, could, this could be, but this is a huge amount of volume out of nowhere. How long's this chart been, or how long's this stock been around? This is like a SPAC IPO that basically looks like, what is that, 2021? Was this like a SPAC? I'm guessing. Some sort of SPAC, got all the way up to 17 and then got shorted down. Yeah, I mean, could it be worth a small runner on? Yeah, I mean, you could take a look at it. I wouldn't. With something like this, I would keep it very, very small for me personally because, they clearly need cash. So the pre-orders will be great for that, and if they can execute, that's what matters. And then down the line, they could be worth a lot more. So yeah, I wouldn't. Some things I'd look at, I'm like, no, I wouldn't touch that. This is one that, yeah, I could see. It looks like it's been down, just beat down since the SPAC, basically, and so, or IPO, whatever they do. But yeah, just at a glance, that's a lot of volume on a one-day candle. So that must have been the day it was, announced. Now you're a little bit overbought up in this area, so you're probably going to want to see if it kind of settles out and starts accumulating now, because what will happen is it should dip down before going parabolic. If it does do a cup and handle and get back up to this, like, it'll probably be more in like the 5 to 7 range would be my guess, would be the next move, and then consolidate there. But there you go. All right, where are we at? Chris asks, hey, Alan, I hope you're having a good night. I am. How are you, Chris? Are you in futures? I mean, we can take a look at futures if you want, but like I don't typically trade off futures. I'm more of a just normal, like, during the day guy. I don't typically... I don't get all into that as far as... Because it's almost like... I knew some people do Forex trading, and that's just not me. But let's take a look. Yeah, I think it looks okay. They don't have any immediate dilution that I'm super worried about. So, I mean, if you look here, they have the ability to do some, but at the same time, these warrants right here at 103, they can be registered, and that will bring them down. So, like, the only thing we didn't look at was this, right? Sorry. Just VLCN. Okay. Yeah, they're not like super heavily shorted, so not yet at least. They just I don't think they had a ton of ownership, period, right? Like, who's this owned by? Like, only 3% of institutions own this thing. Like, almost 4, but like that's almost nothing. So these guys are basically probably mainly owned by retail at this point, which is why the stock price has been able to be pushed down. And so, there you go. I do watch futures because it gives me an idea what stocks will do. Yeah, as long as they're not head faking people out, right? Let's see. Oil's still under 100. Sorry about that. Let's see. Bitcoin. Still above 20,000. All right. I think it's time. I'm going to call it a night. You guys have yourselves a wonderful evening. If you want to subscribe, that'd be awesome. We're almost at 2K. I guess the number... Let's see where we're at. I showed everybody earlier with my... What's it called? My YouTube channel. I show people my my big bucks that I pull in here for a full month's work. I'm gonna make $55. So let's see where the stats are though. Here, let's see. Here it is. Thanks, Anna. We'll be seeing you tomorrow. Probably we'll start at 9 or 9:30 for tomorrow. I can't remember what I agreed to with. Let me just see. Did we put down what time we're going to do? I think I did an announcement, didn't I? Announcements. 9 p.m. tomorrow. There you go. Yeah, like here you guys are going to see right here. I just pulled this from today, like right before we started the stream. So my estimated monthly revenue will be $55, and I do this pretty much every night. So I'm not exactly raking it in on YouTube for the person that was trying to call me out and say, "Oh, you're making all your money on YouTube." I'm really not, but that's fine. Can you check shorts on Verdu? Yeah, that's fine. I can do that. There you go. Okay, you got about almost 46% shorted. Cost to borrow is still really low though, so. But utilization's been 100% for a while. This is another stock that's been beat down for a while, and they finally kind of broke out and been moving. So good for them. Stock on the move, always good. But yeah, they had where is the Heavy? Yeah, this is one that can definitely move. Not quite there on the squeeze score, but he still. What changed on this? Yeah, you're right. I've gotten some perks out of this, right? I got a free dilution tracker subscription because I talk about it and I show you guys it. And we do have a code if anyone wants to actually sign up for it. What's wrong with you making money? You're spending your time. That's worth. Yeah, I mean, but somebody was trying to say like, oh, you're making your money on YouTube, and I'm like, yeah, I'm not really making that much money. I don't know why that's a like conversation piece, but okay, sure. But that's fine. Where is it? So if anyone's new, if you want to subscribe, that'd be awesome. Trying to figure out where this thing is. Where is it at? Here we go. Yep. Still at 1997. And here we go. I think I'm going to buy... so Jay's going to buy some VLCN, and then I asked about 4 other stock gurus. You're number 4. All you said the same thing. It looks like a decent company, medium term. Yeah. I mean, number 1, I'm not a guru. I'm just a dude that looks at stocks sometimes. So, but yeah, I mean, long-term overall, I would take a flyer on them. Like, I wouldn't throw, like, my life savings or anything, but, like... it might be something that you could buy. It looks like it's been beat down pretty much off this, like, it came out. I don't know if this was an IPO, but if it came out, it's been chopping around. People got excited and then just got absolutely, like, hammered. But if they're actually releasing some products and, like, you might see some cash flow flowing in, then, yeah, that'd be something that'd be interesting, especially down here at these levels. I'd be curious to see if they try to push it down more and then get an entry. There wasn't any gaps, right? I don't think so. If it was tight around here. So I would have probably seen if there was an entry somewhere around here. If it goes up a little bit and then comes back down, or if it's just, But, yeah, it could move. It could move. But, once again... these headlines you have to be careful of. So. Yeah, I would imagine because of what they look like they had. It looks like they have GPSs in there, so I would imagine the chip shortage probably slowed down production of what they wanted to do, which means you're bleeding out money. So. I need to start showing my hairy toes. That's pretty good. All good. All right. So you guys have a great evening. I'll post the link to the Discord server. If you're not part of it, you can come join us and hang out. At least throw it in there for you. There you go. Yeah. I'm going to start my OnlyFans soon. Just talk about stocks on there. Try to get some workers on there to learn about investing. Okay, there you go. All right, well, you guys have a great evening. It's been fun hanging out. Hopefully all you guys got to learn something, or if you want to talk about something tomorrow, bring your questions, because we're going to have somebody that actually worked on the other side. Someone that actually, worked for smart money, so he knows a good deal about things, and you might ask him his hedge fund stories and all that stuff. So, all right, you guys take it easy and have a great evening, and I'll see you tomorrow.